Hello traders, extremely exciting morning. While listening to Comey's testimony, we've been monitoring very crucial Fibonacci support. As you can see, this is Fibonacci reversal zone. This is where you know the rules, you're monitoring for long bullish point of entry. This is what we dealt with during testimony. So will S&P finally skyrocket and go through the roof? Massive pause at this level. As expected when it correlates with hourly resistance. But this is a place you never short near. This is a place you monitor for reversal. So ladies and gentlemen, S&P is finally moving up. So what's extremely important to pay attention to? Hourly level next. As you're witnessing, extremely powerful reminder when not to short the markets, what not to enter into, where to monitor for the rules to be met. Rules are not met, do not take a trade. Hourly resistance still remains an obstacle. We discussed with students pros and cons. We discussed with students that buyers are still struggling. Knowledgeable trader knows exactly what he is paying attention to. Being a follower in day trading, the most dangerous idea ever. Knowing how to place your trade, knowing what you're paying attention to is the key. Buyers remain weak, traders. Knowing what to pay attention to is the key. Next. So again, this hourly chart, this level's been present in the room well before today, showing you Fibonacci is the only predictive natural tool in the market. This is a previous Fibonacci support points of entry. As you could see and witness, students shared what they take and how. On May 23rd, we were drastically lower. This was key Fibonacci target. On May 25th, we were at Fibonacci support. So is May 30th, so is May 31st. Take a look at this level and take a look where we are today. We are extremely high. We're in the same place where we were yesterday. But this hourly resistance still remains a huge obstacle. Exact same resistance we paid attention to since early morning. In order for buyers to be in charge, this resistance must be out. Look at the accuracy and precision, no matter what you trade. Buyers remain weak. And what you're witnessing on gold right now is the exact same reminder. Levels present in front of you for years, in a play now. Knowing what to do with your position, knowing where to enter, knowing where to exit remains the key. This was crucial Fibonacci target prior. That's right now crucial Fibonacci support, but no surprise where gold collapsing from. Fibonacci reversal zone. Exact same level you're witnessing in front of you right now, except you don't have to wait for months, years or weeks. You are seeing it now, instantly, in the trading room. So what will trade do? Will it finally blast through hourly resistance? Shock or not, once again we are on the right side of the market. The only problem remains, buyers remain weak. And this is critical moment on S&P. And this is what price is telling you now. Buyers remain extremely weak. You want to stay through pain, you better know what you're paying attention to. As to the tick, little baby chart S&P is struggling immensely. When this level is out, buyers will be in charge. Until then, extreme caution on S&P now. Decision point 2 on this little baby chart, hourly resistance must be out in order for buyers to be in charge. Traders, shock or not, look what market is doing. Look what we discussed with students just now. This was expected. I warned you, buyers remain I warned you, we're not out of the woods. Take a look at that precision. Take a look at that dance. That's what separates knowledge from being a follower. That's what separates trader who is quite aware of the chop we still remain stuck in, and the importance of decision point to on your trade if you choose to participate with weak buyers. Shorts near this area not an option, but buyers remain so darn weak. How disappointing. No bullish rally whatsoever. Bullish weakness only. Market remains in excruciating pain, traders. To the tick, decision point 2 is respected as expected. Ladies and gentlemen, and here's oil. Remember this chart been present in the room since early May? Horrific bearish news yesterday doesn't mean a thing because reversal zone is present. Buyers stepping in. But this is a major obstacle. Remember decision point 2 on this trade? Look at what we're dealing with. Price action remains the same everywhere. Fibonacci levels identified in the room since early May remain intact today, Thursday, June 8th. And oil reminded you, OPEC production cuts did not mean a thing, as oil collapsed 700 points since that announcement. And oil respected decision point 2, that's right now crucial Fibonacci resistance on S&P for days. What you trade, absolutely up to you. Fibonacci levels remain the most accurate profit target no matter what you trade, which was very important target on oil from May 30th through June 7th, as discussed before oil news yesterday morning. Oil collapsed from this level. S&P there now. Will it finally skyrocket? Can you do that? Fly through the roof. Pretty please. Breakthrough decision point 2. As we knew, shorts into reversal zone, never an option. Boom. You can do it, baby. Fly. Woohoo! And that's the reason I live and breathe what I do. And that's the reason I'm closing room right after this trade until June 27th. If you follow passion, money will come. Never concentrate on money. Always concentrate on passion. If you follow passion, every single day in your life will feel like a vacation. I'm very fortunate to follow my passion, not to concentrate on money. What I share with you is all the work I had done with price action and Fibonacci since 2008. What you choose to trade, absolutely up to you. Each and every day you're witnessing accuracy on S&P. You want to trade Apple? You want to trade Euro? Choice is yours. Price action remains the same. The only difference, what you trade, is risk management and trader psychology. We are entering boot camp when S&P reached bullish trend exhaustion. Day trading conditions had never been more challenging. You can deal with overextended bullish rally. You can trade anything. When institutions continue buying every single pullback with vengeance. Until we see institutional sell-off, market will remain the biggest challenge in years. But when market will start institutional sell-off, you better be ready. You better know how to place your trade. You better know how to execute. Because after extremely challenging market conditions, market will go into free fall eventually. It can be next week. It can be next year. Mastering different market conditions, absolutely crucial. Right now, brokers having a ball because market dancing in correction most of the time. Mastering corrections is the key. Without knowing corrective markets, success is not possible. Right now, S&P is still taking pause at exact same level we were been forever. Right now, Apple sitting in correction. Before, Apple collapsed from reversal zone despite stunning earnings. Now Apple not collapsing. And again it rallied despite horrific earnings. Chart present in front of you for years. And remember what Apple had done at decision point 2, where S&P is now. Identical place. No ifs or buts about it. If I remove the name from the chart, you wouldn't have a clue. Is this 5-minute chart or is this monthly? Is it Apple or is it Euro? Price remains the same. Or is it gold that testing you now to the core? All the same formula. Doesn't matter what you trade. S&P is killing me. Are you going to fly through or are you going to sit here pretty? Ladies and gentlemen, bullish rally in a progress. Trail extremely carefully, last moment on S&P. That's what separates knowledge from being a follower. Key moment. Will bias finally break through this hourly resistance and through reversal zone you're witnessing in front of you instantly? You do not wait for a minute, you do not wait for a week, for a month, for a year. You witness instantly the accuracy of the method and you know extremely well. Each and every day you spend with price, you become better trader. You're not becoming better indicator shopper. You're actually mastering the markets. This was expected. If market would have retraced lower, bullish rally would be more powerful. We would have more space from here to here. Magical moment. Stay out of all the junk, stay out of all the fluff. When I warned you on the first bullish pullback, it was meaningless. This one is meaningful. Knowledgeable trader is in it, but knowledgeable trader knows market can collapse completely at any moment. How many points a day do you need? And that's what determines the rest of the story. What you trade, absolutely up to you. Ladies and gentlemen, at any moment, we're closing for a boot camp. So, if you would like to join us, last moment to sign up. We are in bootcamp as of June 12th. Bootcamp part of the course. All the information under Learn. Last chance to sign up. Reminder, we're closed on Friday, June 16th for Father's Day weekend. We will meet for bootcamp last day recap instead on June 26th. New students saving $888 by not paying anything extra for bootcamp. When students, even those who take bootcamp number 8 or 10 or 11, paying this fee. Warriors will be speaking in bootcamp as S&P continue rallying. And that's the reason I live and breathe what I do. I invested a whole lot more than 10,000 hours into study of price action and Fibonacci. And if I've shown you today that using anything else as a background noise, I've done my mission. And if I encouraged you today to close everything else and start studying price action and Fibonacci, if you cannot afford the course, that means you cannot afford being in the market. You cannot be in trading if you are under financial stress. Reversal zone is present, shock or not. Monitor for selling pressure. Once again, instantly. No need to wait for weekly and monthly. No need to wait for delays. Here we are, stuck forever at reversal zone, but market not reversing because decision point 2 is holding it. My goodness! Exact same thing as gold is doing now on weekly. Boom. Pure magic every day. Never gets old, I promise. Which means price can skyrocket still. What a powerful reminder of the importance of playing by the rules and never ignoring reversal zone. Decision point 2 right now, holding the key to this trail. And this is what students sharing now. 3 points. Jack just started the course. And that was Comey's testimony, traders. No one shorted the markets because Fibonacci support told you so. This is the key moment on S&P. This level is out by the end of the day. You may see brand new historical high. Knowing where Fibonacci levels are will keep you out of trouble. Comey's testimony, very powerful reminder. Respecting Fibonacci will always keep you on the right side of the market. Decision point 2 is respected. S&P did not reverse. Look at that. And that's all I hear from my students each and every day. Flawless, Fibonacci, always. All you have to do, play by the rules. Bullish rally remains in progress. Ciao,